Good evening to one and all, and a very warm welcome to all of you in today's internal audit industry specific series. And today we have real estate and infrastructure session. So before embarking on today's session, may I request backend team to play ICI motto. Yes, Vaibhav, is there any issue?
साउंड नहीं आ रहा है।
हाँ, साउंड नहीं आ रहा है। मिश्रा जी, वैभव कौन है?
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. So with this, may I request Secretary of Institute of Internal Auditors, Bombay Chapters, Ms. Pooja Dhareva, to come and address us. Over to you, Pooja.
Thank you, Jinal. Hello, everyone, and a very warm welcome to each one of you present here today. It gives me an immense pleasure to welcoming you, each one of you, on behalf of Institute of Internal Auditors, Bombay Chapter, and seeing this entire session series happening in collaboration with WIRC of ICAI. I think this is very, very encouraging. While we are talking today for the session, the industry-specific series, which talks about real estate. Real estate as an industry touches each one of us in our lives. We all have been seeing it very nearly, and I think हम जहाँ भी जाते हैं चलते हैं हम हमेशा कहते हैं यहाँ पे कुछ तो हो रहा है. Let it be residential complexes, let it be commercials, let it be infrastructure development across cities, towns, so on and so forth. But looking at it from a different lens, from a corporate perspective, I think there's a lot more. What we see is just from a external perspective, but when we reflect back, the behind the scenes seems to be very complex. I think across multiple industries that I have seen, real estate is one of the industry which is really complex when it comes to revenue recognition, talking about project monitoring, the cash flows, and moreover expectation management of various stakeholders. Hum sabhi ne RERA is something which we all came across in last few years, and we have been seeing that the compliances aspect which this industry has also gone up from what it was earlier to what it is now. Such a transformational industry and such a fast-paced industry where there's so much of, let it be from the overall compliance aspect or overall from the project monitoring management, looking at how the developers are, how the entire machinery is, let it be a state machinery or the individual, corporates who are functioning in this industry. I think there has been a lot happening. And when we talk about ourselves as internal auditors, we always say we are no longer just the check markers, looking at the checklist and tick marking of whether something is complied or not. Evolving along with time, staying relevant, understanding what's happening, and contributing the best in our way to the organization is something that is what we are all known for. I'm truly delighted to see Gauravji here today with us. Thank you for your time, sir. So that, with your experience and expertise in this domain, I'm sure all of us and the profession at large will benefit from this session. We are looking forward for an enriching session ahead. Before saying and giving back to Jinal, I would like to mention a gratitude to entire team of WIRC and IIA for organizing this and having this such a great session planned. Thank you, everyone.
Thank you, Pooja. As rightly said by you, roti, kapda, and makan are the basic necessities of a person's life, and makan ke bina nahi chalta. So when it comes to makan and office, it is all real estate. So let us, deep dive in the industry, understand what are the dynamics, what is real estate industry from regulator perspective, and how do we audit, internal audit, and how do we strategically give good inputs to the management to improvise. With this, we have our chairman, CA Ketan Sahiya sir, vice chairman, CA Piyush Chandak sir, and Vikasa chairman, CA Jitendra Sanglani sir is also with me. It gives me immense pleasure. With this, may I request Jitendra sir to address?
Thank you so much, Jinal ma'am, Chairman of the region, CA Ketan Sahiya sir, Vice Chairman, CA Piyush Chandak ji, the session speaker, CA Gaurav ji, Pooja ma'am, Satish ji, and all my dear friends. Friends, it's actually heartening to see that we have this kind of series happening at WRC because this was long sought after. बहुत सारा काम इसमें हो सकता है. Internal audit is a heart blood when it comes to management function, and I believe that real estate industry, which is one of the say major contributors to the economy, is actually addressed today in terms of internal audit. So my heartfelt say congratulations to the entire team who is working in this particular area, especially Jinal ma'am and Chairman sir. Thank you so much for organizing such series and looking forward for a meaningful session. So thank you and thank you all.
Thank you, Jitendra sir. With this, may I request Vice Chairman, CA Piyush Chandak sir?
Thank you, General Madam. Dignitaries all present online. I'll not take names again, but lots of gratitude. I would say a few words about internal audit. Like when we drive any vehicle, we know without brake, you cannot have a confidence on driving. Likewise, without internal audit, none of the management can have that confidence that whether the organization is working good, whether all the things are in place, whether all the procedures and systems are being followed, and whether the standardized product is being delivered to the particular customer. So likewise, when internal audit is in place, even the job of auditor, that is statutory auditor, becomes somewhat simple and easy, and I can say more reliable when he says that when internal controls are there in place, he relies on the work done by internal auditor as well. So that is how this is the beauty and this is the importance of internal audit in any organization. When it comes to real estate industry, it is like when you say that internal audit is in place, you can say that all the things are done well and it is delivered well in time and well with quality. With this, we have greatest faculty. Let us have and let us share with the knowledge with him. Over to you, General Madam, for this opportunity, and thank you for patient listening.
Thank you, Vice Chairman sir. With this, now may I request CA Ketan Sahiya sir, Chairman of the biggest region of ICAI, to address us. Over to you, sir.
Thank you so much, Jinal Savla, Secretary, Western India Regional Council. With me, Vice Chairman from Nasik, Piyush Chandak, the Worthy Vikasa Chairman Jitendra Saglani from Nagpur, Satish Ji, Pooja, our learned faculty for the day, Gauravji Agarwal. I think a fantastic session ahead, and I'm very sure with the kind of knowledge and expertise Gauravji is having, we'll have a very learnings ahead. This is one industry on which almost 200 other industries are dependent. There are suppliers, more than 200 suppliers to a builder, and of course this industry, as rightly explained by Pooja, had undergone a transformation because of the coming of authority called RERA. But however, there's a long way to go in. I think it requires more transparency. We see there are very limited number of players which are there in a listed space, and of course there are unorganized so many players in a city like Mumbai. I think more than 5-10,000 builders are there, and of course it requires a control. And I think internal audit is one such profession. If internal audit of a builder is carried out, we will able to see that what kind of cost which is incurred, what type of lands are there, when the agreements are executed, what is the implication of indirect tax like GST, stamp duty. I think various expertise is required when you carry out an internal audit or a stat audit of a real estate company, a builder and developer. But I'm sure this session is going to be a thrilling, and we will have a lot of knowledge sessions from the Gauravji. With this, I invite all of you to 19th and 20th December, the biggest program of our Western India Regional Council happening at Geo World Convention Center. Asking all of you, requesting all of you to participate in this conference. On 15th, we have, the early bird ends. So the cost of conference is over 10,000 rupees, but at till 15th, the early bird fees is 5,000. Take maximum advantage of this, the early bird, and get yourself registered. Thank you so much. Over to you, Zinal Madam.
Thank you, Chairman, sir. So, as rightly said by Chairman, sir, let us understand the dynamics of whole ecosystem of real estate and infrastructure industry. It's not just residential, but commercial, all infrastructure, because without that, our life is incomplete. And now for formal introduction, may I request CA Satish Gupta ji to introduce our today's learned faculty, CA Gaurav Agrawal ji, in an innovative way, as always, sir. Over to you.
स्लाइड आएगा वैभव जी इनका सर का? Yeah. Thank you. So, friends, I am CA Dr. Satish Kumar Gupta, and I have a privilege to introduce CA Gaurav Agrawal ji. So, sir, कितन सर बहुत सालों से मैंने चाय छोड़ रखी है, तो मैं कहीं भी जाता हूँ तो एवरीवन आस्क मी कि लेमन टी लोगे कि जिंजर टी लोगे कि ब्लैक टी लोगे कि भाई nowadays interested in only property. सो आज हमारे बीच प्रॉपर्टी के विशेषज्ञ सीए गौरव अग्रवाल जी हैं। हमारे ओन फैकल्टी फेटर्निटी से बिलोंग करते हैं। एंड गौरव जी इज ए सीजन्ड ऑडिट एंड रिस्क मैनेजमेंट प्रोफेशनल with over 2 decades of rich experience spanning internal audit, enterprise risk management, internal controls, and IT and information security audits. So पहले ही पैराग्राफ में फ्रेंड्स आपने देखा बहुत सारी बातें रिस्क की लिखी है, एंड वी लुक फॉरवर्ड कि गौरव सर रिस्क को कैसे डिफाइन करते हैं इस इंडस्ट्री में। एंड आई ऑलवेज यूज टू से दैट एज ए ऑडिट प्रोफेशनल राइट, हम लोग एश्योरेंस तो कर ही रहे हैं, एडवाइजरी कर रहे हैं, हमें एंटीसिपेट भी करना है सो दैट वो प्रोएक्टिव रहे, रिएक्टिव ना रहे। बट लेट मी कन्फेस कि ये प्रैक्टिस अभी बहुत नेसेंट है इंडिया में एटलीस्ट, क्योंकि हम राइटली इट इज समवन हैज सेड दैट इश्क छुपाए नहीं छुपता और रिस्क दिखाए नहीं दिखता। सो हम लोग एज ए मैनेजमेंट के सामने कितना भी बोले कि दिस दिस एक्टिविटी और दिस अफेयर कैरीज सम रिस्क, राइट, सो वो जब तक क्रिस्टलाइज नहीं होता है रिस्क या मटेरियलाइज होने की स्टेज में नहीं आता है, generally people are very not keen to act on this. So we love to see that Gaurav Agrawal ji has a lot of expertise in this domain. He has been a part of the Godrej Group for more than a decade, where he has played a pivotal role in shaping the organization's audit and risk governance framework across its global operations. At GPL and GCPL, he leads the corporate audit function, integrating traditional audit principles with cutting edge data analytics and IT assurance practices. He is a chartered accountant, as well as CISAs, Certified Information System Auditors. सो सीसा देख के मुझे याद आ रहा है राइटली कि आज 2-2.5 साल के बाद, मन्नतों के बाद, जिसको कहते हैं, डीपीडीपी रूल्स नोटिफाइड हो गए हैं फ्रेंड्स। चूंकि हमारे गौरव सर का काफ़ी एक्सपर्टीज है सिस्टम इंफॉर्मेशन टेक्नोलॉजी में, तो राइटली मुझे अभी याद आया कि हमें सबको इसके ऊपर भी अपने आप को अपडेट करना है, अपग्रेड करना है। क्योंकि पहले लोग कहते थे कि जीएसटी सबसे बड़ा रिफॉर्म्स है इन टर्म्स ऑफ द लॉ रिफॉर्म्स, लेकिन इन माय व्यू ये जो डीपीडीपी एक्ट है, 2023 का एक्ट है, अभी जाके चूंकि रूल्स आया है, तो अभी ये नोटिफाइड हो गया आज ही से। मुझे लगता है कि डीपीडीपी सबसे बड़ा लॉ जो आजाद भारत में आया है, बिकॉज जीएसटी ने तो सिर्फ बिजनेसेस को टच किया था, राइट, बट ये डीपीडीपी विल गोइंग टू टच एवरीवन, ट्रस्ट हो, नॉन बिजनेसेस हो, इवन सेक्शन 8 हो, किसी भी प्रकार का एंटिटी है जो कंप्यूटर यूज करता है, डिजिटल अपने कस्टमर्स का इंफॉर्मेशन रखता है। So Gaurav has an expertise lies in building strong risk awareness organization by viewing audit not merely as compliance but as a strategic business enabler. और आज जीनल मैडम, मन थोड़ा चंचल है, जैसे हल्के फुल्के अंदाज में कहने का है। मन हो रहा है कि भाई इंटरनल ऑडिट के अजब से अफसाने हैं, यहाँ तीर भी चलाने हैं और पंछी भी बचाने हैं। सो we will love to hear more insights in depth and in great deep from our today speaker Gaurav Agrawal ji. Over to Zinal madam.
यस सतीश सर, आपने सही कहा, तीर भी चलाने हैं और पंखी भी बचाने हैं। सो विद दिस मे आई रिक्वेस्ट पैक एंड टीम टू प्रेजेंट द सर्टिफिकेट ऑफ अप्रिसिएशन. दिस इज फ्रॉम both the institutions, WIRC of ICAI and Institute of Internal Auditors. Sir, it gives me immense pleasure to present this certificate to you on behalf of both the institutions. And with this, may I request our today's learned faculty, Mr. Gaurav Agarwal, to commence our today's session. Over to you, Gaurav sir. Thank you.
Thank you, Jinal ji. After this interesting introduction by Satish ji, it's been it's actually a pleasure and my honor to be here on this forum and sharing whatever I have learned with my fellow friends and colleagues. Thank you WIRC and IIA for having me here. It's really a nice opportunity for me to speak to my fellow colleagues. So, friends, as Pooja ji started saying that, real estate is very complex. It is indeed very complex. And, I can say this with conviction because having worked in different industries, and as I, dabble with FMCG also in Godrej Consumer Products currently, and having worked with cement, with steel and other industries earlier, I can tell you with conviction that real estate is very different. And I've found that in most occasions, a lot of people, especially from the audit fraternity, are a little bit of lost into, where to start when you do a real estate audit. And I myself was lost initially when, 15 years back, I joined Godrej Properties when it was a very small business. That time I couldn't figure out initially on where to start because, we as chartered accountants are not technical experts. We are not engineers. And real estate works a lot on, the engineering stuff. So getting knowledge of that, getting on top of it very quickly, and then to deliver to the board and to the audit committee was a really tough task. But I think with a lot of support from my colleagues, my seniors, we were able to do that. And the way I have learned real estate in the last 15 years, the nuances which I have picked up, I've tried to bring all of that into this presentation today. I hope you all enjoy it. And wherever you feel the need to ask questions, please feel free to ask. So I'll quickly share the presentation which I have prepared for today. Can someone let me know if it is visible to all?
हाँ सर दिख रहा है.
Yeah, okay, thanks. So, friends, this is the agenda for my presentation today. I'll be talking about the real estate industry in India, the unique features of real estate industry, and the common problems which this industry faces, the whole ecosystem around the industry, the common frauds which we see in the industry, because it's a very unorganized kind of a setup, and there are a lot of opportunities to do fraud. So I'll be sharing those as well. Then I'll be sharing the opportunities and for auditors, as internal auditors, what all opportunities we have and the skills required to do those audits. There are a few areas where if we pay a little more attention, we'll be able to contribute a lot more to the audit process. Then, deep dive into functional areas of audit, including all the operational, sales, and business development areas. Then using technical experts, because we may have limited knowledge in some of the areas, and we may need to use technical experts in some of those areas. And then the whole governance process around real estate industry. So talking about just the real estate industry in India, it contributes 8% to India's GDP, and it is projected to reach about 90 lakh crores by 2030. So it's a big business, a sizable percentage of our GDP, which also means there's a lot of work going on everywhere across the country. And that is, largely into residential, where, 80% of the industry is residential, and the rest is, commercial, industrial, and warehousing development. And with the advent of so many infrastructure developments around the country, we are seeing a lot of work happening in the warehousing and the industrial sector as well. Traditionally, the largest markets have been Mumbai, NCR, which has Gurgaon, Noida, Faridabad is up good upcoming big area. Then down south Bangalore and Pune. Now, there are a lot of other cities which are rising. These are upcoming. Some of them are already good, mature markets. But again, we are seeing a lot of fast growth into these markets, which are Hyderabad, Chennai, Ahmedabad, Surat, Indore, Kolkata, Kochi, and Nagpur. A lot of infrastructure development and commitment of funding around the temple towns is leading to a lot of real estate boom in these cities. So if you go to Varanasi, Ayodhya, Amritsar, Vrindavan, you'll see a lot of real estate activity happening around these areas. And as I said, infra upgrade is leading to a general uplift in several other cities across India. And we are seeing this in smaller hinterlands, the B towns. They are also seeing a lot of development in real estate. The current trends, if I speak about how industry is progressing, we are seeing that the demand for premium housing is increasing. So with a lot of increase in the disposable incomes of people, the aspirational value is increasing. So people who are aspiring for a 1 BHK are actually thinking of buying a 2 BHK, to put it very simply in Mumbai terms. But if you move across the country, you'll find that premium housing is finding a lot of buyers. And premium housing requires a lot of investment in terms of selection of the land, the quality of construction, the quality of the quality of materials which you use in these developments, and the kind of landscaping you do there, so that it looks like a premium housing. So aspirationally, people are looking for better spaces to live, and that's what is driving the demand for premium housing. There's a lot of focus on ESG compliance as well, because this industry has been a net polluter basically. It guzzles a huge amount of water. It creates a lot of pollution in terms of the dust and the other impacts which it has. So there's a lot of focus on environmental, social, and governance compliance in this industry, and a lot of companies are taking a lot of steps in that direction. So as auditors, I think this is another area where we can focus on and develop our skills there. This industry has been largely dependent on labor, and it's been a very manual work up till now. Automation has been increasing, but it's not of that pace. So most of the companies are now actually trying to look for ways to avoid dependence on labor. So you'll have, prefabrication kind of stuff where, just like China is doing, where you make, prefabricated walls and a lot of other, components which go into a real estate construction, build it in a factory, bring it on the site and just assemble it so that, it becomes a proper house. There's a lot of development in other countries, especially China. India is slowly catching up, and we are seeing a lot of at least discussion and pre-investment stage where people are thinking of establishing such factories and building large-scale housing complexes based on prefabricated items. We are also seeing, a lot of holistic automation in terms of how to build houses by using very heavy automation and machinery put together. So, for example, 3D printing. In Godrej Properties, at least I can give you an example where we built a 3D printed house in Pune. It was a wonderful looking house. You all can search it up on the internet. So there's a lot of work happening there where we're trying to reduce dependence on labor and increase automation, which also brings in efficiency and a lot of standardization in the processes and the materials which are there. Plus, there has been a lot of focus around enhancing the customer experience. So while the regulators have actually forced us through, RERA and various other regulations to give what the customer wants, the real estate companies are also coming together and, trying to enhance that experience for users because the users are becoming demanding and you cannot be, staying away from, enhancing their experience because that results a lot, that actually affects your sale. So unless you invest into technologies and enhancing their experience, users will not come to you. So, people are investing in artificial intelligence, 3D tours of the sites under construction, post construction, and various other, renderings which the customer can see on a tab when he visits your site. So companies are investing a lot on those areas. Just a little brief background about Godrej Properties where I work. It is part of the 21, 25-year-old Godrej Industries Group, which has various other industries called, we are into chemicals, in FMCG, agri-chemicals, animal feed. Godrej Capital is our newest venture where we have entered into housing finance, which is basically an ancillary to properties. We are also into dairy products, which is a Hyderabad-based company where we make various dairy products. Godrej Properties has a market cap of about 70,000 crores. It is among the top 3 real estate developers of the country. Currently, we are seeing about 70 plus projects which are in various stages of completion across the country. We have presence in all the major towns as well as Chennai, Nagpur, Ahmedabad, Kolkata, etc. We are mostly into residential, but have also tried our hands into some commercial developments. And we are also recently, we have ventured into plotting schemes where we are making, buying huge pieces of land and developing and cutting and developing plots there. So that's about Godrej Properties. Let me come to the uniqueness of real estate industry. Much has been spoken about it, but what is so unique about it? If you compare it with the let's say a manufacturing industry where you make something and it gets sold on the counter or through online or various other channels, the customer sees the product and the customer can buy it. But in real estate, you actually in most of the times when the project is launched, there's nothing on the site. There is no flat. It's just a piece of land which is there on the site, but still the customer comes and buys it. So the customer is not getting to see the product. So they are just investing into the company, the name of the company, and the promise which the company gives for that particular piece of asset which the customer is going to buy. So there's a lot of trust involved in this industry, and the time takens are huge because the moment you book a flat, the minimum time it takes to build a flat and to hand it over to the customer, it takes between 3 to 3.5 to 4 years, depending on what the project is. And because of this huge time gap, there are a lot of variables which affect a particular development. And that has a huge impact on the profitability of the company because a lot of assumptions which have been there in the beginning may not hold true. The conditions may change, the costs may change, which affects the profitability of the company which is doing this development. So in a way, while for the customer it is definitely a risk because if the developer does not hand over the property to the customer on time or does not deliver according to his expectations or does not deliver according to the promise which it had done, even for the company it is a double-edged sword because conditions have changed. They are not getting the kind of profits they initially envisaged. Some unexpected costs came in, some force majeure items come in, and then the company is also thinking equally in terms of how to safeguard their own interest plus the interest of the customer. So it's a very fine balance which the industry has to work with. The accounting norms are very different for real estate. You recognize revenue in all the other industries as soon as the goods reach the customer. But in this case, the goods have, they don't reach the customer for at least 3, 4 years. And that's why we have an accounting norm of, recognizing revenue based on project completion. So when the occupation certificate of the project comes in, that is the time you recognize revenue in your books. Up till that time, whatever you have sold is just the booking value, and whatever the customer pays is an advance. So to have a healthy quarter by quarter top line and a bottom line, the company has to continuously invest into newer projects which reach various stages of production, various stages of completion every quarter. Because when you see a very upward and a downward movement every quarter, you don't feel like that this company is working well. So you need to have a very healthy pipeline of projects which get delivered over a period of time, and the customers can actually see the trust in that company. Plus, also from an accounting perspective, there are a lot of things which go into recognizing the revenue. So, and that's where, auditors come into picture, to check whether everything is hunky-dory. Managing cash flows is another critical activity here, because we've seen in the past that poorly managed cash flows can lead to a very significant downfall of these companies. So you may have unfinished projects, companies going bankrupt, customers losing their money big time, just because the cash flows were not managed properly. And that's where the government brought in RERA, which is the Real Estate Regulation Act, which says that mandatorily you have to keep aside a certain portion of your funds in an escrow account so that they cannot be used. They can only be used for for that particular project. You can invest the remaining proceeds into other business, other parts of your business. But for that project, you need to keep aside a certain percentage. And that's very critical, because if you don't do that, the project is never going to see the light of the day. So managing cash flows, according to me, is actually the top most important item in real estate. Profitability comes later. Okay? This industry continues to be one of the very highest regulated industries, because as you saw, 8% of GDP is a huge number, and a lot of customers get affected if they don't get the property in the right way or in the right time. You must be reading newspapers every day that this developer is not delivered, and the consumer court or the high court or the supreme court, they have slapped huge penalties on the developer. The RERA authorities have awarded certain sentences to the customers. So putting all of that together, the government realized that there is a need to regulate this industry, and it has come to an extent where the regulations are so high that to ensure compliances in one project, it's a huge task. I've seen it up close, and having 70 projects at the same time, managing regulations for all of them at the same time, it's not easy. At some point of time, in fact, people feel suffocated that do we do business or do we do compliance? So that sort of a thought process also comes into picture. This industry is very unorganized, because of the people you work with here are not generally, they are not used to a certain way of working. They have their own processes. You work with contractors who rely a lot on labor. You work with channel partners, or you can call them brokers, which is again a very unregulated industry. Then all your, consultants, a lot of other partners, which I have, in subsequent slides. So it becomes a very unorganized cohort of components which force you to be a little unorganized, because if you start putting up processes there's a lot of resistance and friction in the system, right? So no matter how much automation you do, no matter how much process oriented you are, the industry forces you to work in a certain way, and then you have to accede to their demands, because you can't be the lone player putting all your processes in picture, because you're dependent on a lot of people, right? This industry also works on a lot of assumptions and estimations, because when you initiate a project, you really don't know a lot of things. A lot of things are based on future, future events which may happen or may not happen. So you have to assume things in a certain way, and then you start off your development. So when you maybe, let's say, envisage a project, you will assume that I will get an FSI of X amount, let's say 2.5. But some regulation comes in, there is some lacuna in your project, and you don't get that much FSI. So that brings a very significant drop in your revenue projections, or you can say the actual revenue which comes in. But you would have estimated that kind of a revenue 2 years back. So how do you deal with that? Those are very practical challenges which are there in the real estate industry. And assumptions are not related to FSI, they're related to several other things. Your possibility of getting a land parcel which is encroaching into your project. There's a legal litigation, the owner is not wanting to give you that part of land. Then you assume certain cost, but when you go out in the market, you find that this cost is not workable, the cost is significantly high, and there are a lot of other things which don't go according to you. So in a way, it's a very unreliable kind of a scenario when you start off with a project, and you have to make things work in a certain direction to get to where you want in terms of profitability and cash flow. And lastly, this industry is, it's replete with practices, because as I said, it's unorganized, a lot of manual processes, the whole ecosystem around real estate, deals with a lot of, non-conformities. So there are a lot of fraudulent practices, and there's huge money involved, because if you just see the amount of, brokerages floating around in the market, 4 to 5% brokerage on a 1 crore flat is a big money. And there are a lot of people who would vie for that kind of a money. So people do a lot of collusion, there are a lot of employee and broker collusions, a lot of, contractors who are working with you, who are actually willing to share something with the employees. So there are a lot of frauds which, we've come across, and I'll be speaking more about it in the later slides. Some of the common problems which the real estate industry faces, and this is just an extension of what I spoke in the last slide. Project delays remains the largest headache for all the developers, and those delays could be in construction, in getting approvals, simple approvals for the land, sorry, for the development. A lot of litigations which you don't know when you enter a project, or somebody lodges a legal case on you, and because of certain reasons, and then you have to deal with it. Cash flow issues, and real estate industry is always perennially short of cash. Then labor shortages, which I speak about. So all of these put together in different degrees lead to a lot of project delays. Now, if you know a little bit about RERA, under RERA you need to deliver a certain project by a certain timeline, and if you don't do that, there are huge penalties involved, right? So you can't take that risk. So while developers are cushioning themselves by putting in a little higher timelines, but still sometimes it almost reaches the wire, right? And that time there's a huge frenzy in the developer community to deliver projects as quickly as possible in whatever way they are able to complete it and get approvals for the occupation certificate and then hand over. So it's a tightrope walk in terms of timelines when you think of it. There are a lot of budget overruns because, again, as I said, assumptions may not hold true. You may have done budgeting incorrectly, or some additions came in, some design changes came in because of certain unknown things earlier. That leads to a lot of budget overruns, and then you have to deal with it. High cost of capital and borrowing. So real estate as such, is not trusted that much by the banking community and by the individual investors as well. So there's a very high cost of capital involved for the real estate industry. Cash flow management, I've already spoken about. Then compliance. I think Satish ji mentioned about compliance. Compliance is a very big area. There are a lot of laws which are applicable to the real estate industry, and slightest of mismanagement can lead to huge penalties. Those could be related to your environmental approvals or labor laws or simple corporate compliances. If a real estate company does any kind of mismanagement in compliance, the repercussions are huge. So that has to be continuously monitored. In terms of automation, if you see, look, the automation in most real estate companies is not perfect. And that's also because of the nature of the industry, because there are a lot of areas where you can't really automate, or you can automate, but they remain in silos. They don't talk to each other many a times because the industry is not designed to work in an integrated fashion. If you see the companies abroad, like the developers in, let's say, US or UK or Australia, there you will find a lot of automation, but there also they struggle with some of the areas where they are not able to fully automate. So you can very well imagine the plight of Indian developers, where commitment to spend on IT is not that much. Even if they spend, it's into broken pieces. there are not many, capable applications which you can implement in certain areas. So it remains a very disjointed kind of a, IT system which you have, which is not able to give you what you really want. People are working towards that direction. Some companies might have achieved different levels of automation, but that certainly remains an area where we need to develop. Then this industry deals with high level of attrition. One peculiar aspect is that here is that when a person in real estate industry, let's say an employee, takes a decision to do something, because of the long time gap, the impact of those decisions is known after, let's say, 1 or 2 years, because by the time those things are actually executed, and it takes that much time to actually execute things, and when you know the impact, and if that impact is not suitable for the company, by that time the employee who has taken that decision has already left the company. Right? And we've seen ample of cases that just to showcase that somebody has done good work, they'll say that I'm taking a particular decision, and he or she knows that the impact will come in only after 2 3 years, when he's not going to be a part of that system. So dealing with that kind of a behavior is a very important thing which we need to work on. And then I spoke about rampant frauds in the earlier slides. Sorry, if there are any questions, I'll be very happy to take that up till now. Otherwise, I'll just go ahead.
We can continue.
Yeah, sure.
We don't have questions.
Right. Now, the whole ecosystem of partners which you deal with, look at the diverse set of people who are there. As a developer, you're dealing with a landowner. If you don't have your own land, you are a developer yourself. There are brokers and there are land brokers who get deals to you and they take a cut. There are contractors, and that's by far the largest chunk of expenditure in any real estate project. And there are a lot of contractors which you keep in a single site. So you have civil, mechanical, electrical, and plumbing contractors. You have infrastructure development contractors. You have architects and consultants who work with you. And to deal with all of them, requires a certain knowledge of that area. So you need to have your own teams who understand the nuances of these areas, so that these contractors and consultants don't take you for a ride, right? And we've seen it enough cases that as soon as you have a weak person managing these activities from your side, they will definitely take you for a ride. So those are areas where you can think of cost cutting and saving costs there as well. Then you're dealing with material suppliers and vendors, steel, cement, tile, electrical items, plumbing items, all of that. Then we have channel partners who are basically brokers who help you in selling the property. And that again is a very big business. It's a very disorganized business as of now. A lot of people join hands together. You don't know who's working with whom. And there's a huge attempt to wean away your direct customers and convert them into channel partners, because there's a brokerage involved. And there are a lot of malpractices as well, which I'll deal with in the upcoming slides. Then you have marketing vendors. Marketing relatively is a smaller spend for real estate business, but anyways, you have to deal with them. And then there are government authorities and regulators. I mean, the less said the better about this particular area, because it's a nightmare for most of the real estate companies to get approvals, to get so many approvals at the same time to finally launch a project. And then there are regulators who are closely watching every move of your operations, so you have to keep them happy as well. So these are areas where real estate companies focus a lot at a senior level. Then there are industry bodies where you can, they connect with the other companies in that area. And there are legal firms and tax advisors, because you have to work a lot in terms of being legally correct. So you have to work with legal firms, doing a lot of reviews, searches, and other assurances from these firms. So you have to work with these consultants. Now, as auditors, there are a lot of opportunities for us in this industry. It is a sustained industry. It's a sizable part of your GDP. Of course, it has its own ups and downs, but then, it is one industry which has always remained, and it will remain. Despite any kind of shortage of land you see or slowdown you see, this is one industry which is here to stay. People will need houses to live in. People will move on from smaller houses to larger houses. There's going to be a lot of commercial development. There's going to be a lot of infrastructure development. So this is one sustained industry where if you find a career, it is going to reward you over, your entire life basically. So, it's not like a maybe a startup or a upcoming, sector where you're not very sure of, whether how this industry will progress. It has progressed. Real estate has been around for a very long time. It will remain for a much longer time to go. Now, expertise in real estate is not common, and this I am talking about as an auditor. Understanding real estate and being on top of it, being able to deliver the value which the company wants from you as an auditor, it is not easy and it's not common as well. There are very few people in this sector who have chosen, audit as a profession, and then again, getting into real estate, understanding it, and then delivering. It's not common. So, as an auditor, if we are wanting to get into real estate, it's a very good opportunity. Then, real estate, if I were to put it differently, it's a green pasture. And by green pasture, there's so much of things to do here. When you enter a real estate company, you just point a finger at any area and you are bound to get observations. Right? So there's a lot of scope to implement controls, to have cost saving initiatives, compliance issues, safety, and technical collaborations, IT and cybersecurity, forensics. You speak of a specialization, and this industry has a lot of things to offer to any professional who's into any of these areas. So again, if you are an expert in any of these areas, real estate is the company, is the industry to be there. And then, as I spoke about ESG, environment, social, and governance, it's a big upcoming area. And as companies invest into being more environmentally and socially relevant, and the government paying a huge impetus to these areas, I think auditing in these areas is even more technical. So if you have expertise there, it is certainly going to be very rewarding for the users. Now, what are the skills required as an auditor so that we are able to we are able to deliver what the company wants? We have to understand how real estate works because it works very differently from other organizations. And if I were to give my own example, it took me a lot of time to understand how it works because it doesn't work like your traditional manufacturing industry. So you have to spend a lot of time on the ground, reading, meeting a lot of people in the industry, absorbing what they say, and then put things together to see how real estate works. And there is no one recipe of how real estate works because every company has its own agenda, has their own business model. So when you are into that a particular company, you need to understand what is the objective of that particular company and how it tries to work around various challenges and how it works. So we have to understand it very closely. Then obtain technical knowledge. Now, being from the finance profession, not really being into the technical side of things, this becomes a big challenge. And it is very easy for a technical person to take us for a ride. Okay? So it is very important that we understand the technical nuances of how a project is constructed, how it is built, and how bills are passed, where to, so from a techno-commercial standpoint, we need to have that knowledge and it gets developed over a period of time. We have to develop an entrepreneurial mindset, and this again is a very important thing because in other manufacturing organizations, largely things are sorted and they follow a certain theme, a certain rhythm. Maybe it could be centralized, it could be decentralized, but the process everywhere is the same. But in a real estate industry, at least I have observed that every day is a new challenge. Every day is a decision making, and people on the site they have to take decision on the go. And those could be again, when you look at it in retrospect, they could be right, they could be wrong, they could be partially right, and that creates a huge opportunity for us to audit. And that will happen only when we see things with the lens of the people who are working on the ground. And when you develop that entrepreneurial mindset, you get to understand that what is the impact of a particular decision on the profitability or the continuity of a particular company. So we need to develop that mindset. So just not think as process level auditors who want to do a tick box kind of an exercise, because believe me, real estate cannot be done through a tick box exercise. You have to think like an entrepreneur, and that's where you get your major observations. Then we also need to be ready for surprises. For example, you implement a certain control, you check, through your sample testing, and you find that it is working. The very next day, you will find a deviation from that, because people are like that, the industry is like that. A certain decision gets taken at a particular in a particular area, which was probably in need of the hour, but it circumvented the control. There could be a lot of frauds, a lot of things happening in the underbelly of the company which you don't know, and then the big surprise comes up. So you have to be ready for surprises despite all your best efforts which you take in that industry. Then fraud prevention forensics. We need to have that skill because, as I said, this industry is prone to a lot of frauds. We need to understand what are the potential avenues of frauds and keep a very hawk eye, a very keen eye into those areas to keep identifying frauds. In fact, if I look at my journey here in Godrej Properties, every year I get to investigate about 20-25 frauds. Right. So there are a lot of areas where you can, do a fraud prevention exercise and do forensics as well. Then getting knowledge of the regulatory and tax and accounting environment is also very important because that drives a lot of your behavior. And for example, I spoke about the revenue recognition guideline. You do it, you recognize your revenue based on project completion. Now, let's say you are in March in a certain year and you want to recognize the revenue in that particular year. You don't want to carry it forward to the next year. But the occupation certificate is just not coming. What do you do? That creates a lot of anxiety and that drives a lot of behaviors. Right? So, time bound, accounting bound, and regulatory bound. This industry operates in so many suffocating levers. Okay? And when you get an understanding of that, you know why a certain decision is being taken on the ground and how companies are trying to circumvent those or maybe adapt to those or maybe finding workarounds. And that's where, as an auditor, you have a very rich pasture of observations. Right? Then also, find out industry best practices. So speak to industry peers and find out what's happening, what are the new developments in the industry in terms of automation, in terms of actually doing things on the ground. And when you do benchmarking, you find that a lot of best practices can be absorbed by your company. So be in touch with the industry and you'll definitely find a lot of value there. Now, there are some, based on my experience, I have picked up a list of red flags and the common frauds which you see in industry. Though these are just illustrative and they are not exhaustive, so you may have a lot of other things to add on to this on this list. But just to give you a brief on how things go bad here. One is obviously, employees colluding with the channel partners or brokers, you may call it, to divert direct sales to channel partners and sharing leads with channel partners. So by leads, I mean any customer, any potential customers who comes to inquire about your project and shares his or her contact details like phone number, email ID, and residential address and all. That data is like gold in real estate because that means sale. And for the brokers, it's 4 to 5%, depending on whichever company you're working with, 4 to 5% of the sales value, and it's a very big amount. And knowing the industry, I can very well say that this brokerage goes through various hands. I mean, it doesn't go to just one person. There are, passbacks to the employees of the company who actually help the brokers in, converting a direct, customer to a channel partner customer. There is a passback to the customer itself because, if the customer goes to a site and he's not getting the desired discount, what he does is he colludes with the channel partner and says that, I'm going to register you as, someone who brought me into this project so that you get a lead, you get a commission, and out of that commission, you pass me back some money. These are all practical things which I've seen on the ground, and now it has become an industry norm, right? So, I mean, there's no way to prevent that, but by, preserving your data, at least you can avoid a lot of, cost, which actually goes out to brokerage companies. Then kickbacks from vendors and contractors, as with any industry, here the contracts are of huge values, and getting a kickback in that no particular contract is a huge amount of money. It's not small. It's very big. And how do you do that? You select your preferred vendor. You pay invoices without getting the work done. And invoices in real estate are called RA bills, which are your running account invoices, running account bills. So you pay without actually getting the work done in that particular month. It is basically works in advance, or purely, just by registering a fraudulent vendor and paying money to that vendor, you actually do a fraud. By approving higher costs of those vendors, by compromising on material quality, by paying a little earlier to that vendor, right? So payment terms are generally, let's say, 30 days, you pay that vendor in 15 days just to support their cash flow. Then, many times you pass the bills of a vendor to whom you have already paid in advance. You need to recover retention amount as per the contract. There is a claim which the company has lodged on that contractor, but you don't recover it. You've overlooked the defects. So there are various ways in which a person can favor a contractor and pass on these benefits to that contractor and then get something in return. And here, since the amount of money is so large, you really don't take cash or money in your bank account. There are a lot of other ways in which you get gratified, and the amount of bullion we've seen, it's huge. It's huge. And then approving inflated claims of contractors. And that's again a very big area, because if you look at most of the contractors, they make little money out of the regular contract which they serve you, but they make huge money in claims, right? So it's like you don't get anything by selling a box of, let's say, candy, but you get money by selling the box itself, right? So that's how it works here. So by passing huge claims of the contractor, by not properly checking it and then admitting those claims, a lot of benefit goes to the contractors, which again comes back to the people, right? We have also seen cases where the sales teams take cash from customers for allotting preferred flats to them. So the customer comes, his preferred flat is not available, or at least the sales team shows, artificial shortage of such flats. And then they say that, okay, I can arrange those flats for you, but you need to pay me something. And that's where the customer, who's buying maybe a 1 crore, 2 crore flat, is least bothered to pay a few thousand rupees to that guy, right? In a lot of cases, we've seen that people, the employees take money from customers for waiving off the interest and penalty, which is payable by that customer. So if your controls are not that strong, a person, an employee can waive off any amount of interest and penalty for the customer and take maybe a cut of it. Because here, when you don't really recognize interest in your books as a receivable. It is accounted for in most companies. It is accounted for as and when it is paid. So you really don't know whether 2 lakhs was receivable or 1.5 lakhs was receivable. That waiver amount has a lot of movement within the customer and the employee. And the registration of documents, we talk about, the stamp duty registration, the people, the whole ecosystem which registers the documents. There again, people get a lot of money. And then moonlighting, people in real estate are very high in demand. So based on what their kind of skill is, they do a lot of moonlighting. So they work for different companies or, different components in the whole ecosystem at the same time, and then they get money from everywhere. So that's also quite common in real estate. Now, some of the red flags which you as auditors can pick up just to see an early, get an early warning around those areas which you're auditing. You'll find certain behaviors, which if you pick up, you'll be able to, sense that something is wrong here. And first is people will display urgency, which says that, that you have to do certain things in a very short span of time, which actually limits your ability to take a decision, right? And that's where the real problem starts, because every time they come to you, they'll say that, there's an urgency, and I need to approve something, I need to get this, get that, and please approve it. So those are the areas where they can make money, or they may be doing something wrong. Then there are rush charges, and by rush charges I mean that a certain work has to be done. They'll show as if there was a very shortage of time, and I had to pay a certain extra premium over the normal cost to get that work done on time. For example, you're launching a project, you booked up a hotel where you're doing a launch, and you have to get the internet lease line because you have to work on several computers during that launch. And since it is a very short span of time, you get the lease line at a very high cost. Right? That's just one small example of a rush charge. And people will do it every time, and then they find ways to get even with the supplier and get some cut out of it. Then spot buying. A lot of people, they don't take calls in a longer period of time. They don't decide when the prices are low, and then they do spot buying because the vendor is known to them, and vendor says that please hold on, the price is going to rise, and then we both will make money. So a lot of spot buying happens. Bill passing by junior teams is a very, very strong, very, very weak area. And bills here are worth several crores. So if the bill passing is done by junior teams, they may not probably check properly. When the junior person approves, nobody in the hierarchy actually goes and checks the bill again. They just rely on the previous person and previous person certification, and then they approve it. So, and those bills are definitely bound to have problems. So if you find that junior people are doing the bill passing, you may tick it up as a red flag. Multiple amendments in work orders, and if you're using SAP or any other ERP application, getting the details of amendments is a little tricky. So you're not able to get trails of what work was earlier, desired, and what was the change which was done, what impact it had. Uh, and even if you're able to get that data in real estate, sometimes it is very difficult technically to find out what really would have gone here. Right? So people take advantage of that lack of information. They do multiple amendments, and then they try to even breach the approval matrix of that work order. So for example, your work order has to be approved by certain people in the organization, let's say at a CXO level. And when you do an amendment, it does not go to the CXO. Right? So you do it in bits and pieces, and the whole work order becomes of a very large value eventually. Right? You'll also find that some vendors are always on time. There is no delay by them. There are no quality issues. They are paid very promptly. There are no recoveries which are due from them. Now, in real estate, nobody can be that clean. Okay? So if you find that something looks too good to be true, it is definitely a red flag. When you investigate, you'll definitely find something. Right? I've just tried to put some areas which I thought would be useful for you as red flags, which you can pick up during your audits. Now, I'll move to some specific areas of audit so that you can, when you approach these areas, you can use these as inputs for you. So, if you understand, first is, as an auditor, when I go to a particular company to do an internal audit, we need to understand the business quite well. And these are the areas where you need to look into what kind of development it is. Is it a residential area, a residential development, commercial development, plotting, hotel, and even within commercial, you could, whether it is for sale or lease, because that will change the whole context of fund deployment and the time it takes, the profitability analysis. Right? So just by changing the use of a particular development, the whole commercials around it change, and then you have to audit within that kind of a knowledge. Then, whether the land is your own land, you have purchased it, is it on installments, or is it on long lease, or is it taken from a government under a particular scheme? What are the conditions related to the land? And whether it is a joint venture where one of the landowners comes and partners with you, you as a developer, and the landowner brings his land, then what are the terms of sharing with that partner, or you buying that land? You'll have to understand that. Then what is the role of that particular developer? So, I put a developer here, which is your plain vanilla developer who gets the flats constructed and sells it off. Or there are models like development manager these days, where a reputed developer comes into a property and gives his name and helps the developer sell that project by giving his or her name and branding it as its own project, and then charging a fees on the overall construction value. Then execution, whether it is an in-house construction or it is outsourced. So some companies have their own in-house construction divisions. Some companies outsource it to contractors. Then there are various contracting strategies. You could use design and build, where the entire end-to-end activity is done by a single contractor, or it could be an item rate contract, or various other contracting strategies could be built, whatever suits the company. And when you get an understanding of that, you understand that how a company approaches the whole construction framework. And then you find out what is the philosophy behind it, what are the pitfalls of each of them, what can go wrong, and then decide how to audit it. Then again, getting into sales strategy on what is the comparative pricing strength of your company. And, in some companies, pricing is a no-touch area where, it is decided by the promoters. But in a lot of companies, you can actually go into pricing and see what are the components of pricing, whether it is benchmarked with your competitors. Are you adding an adequate premium, or giving a discount based on the strength or the weakness of that particular property? So as auditors, you can actually question that. And then it also depends on the phasing of the project, because if it is a multi-building project which is going to come up in several phases, what should be the right price in the first phase, and then what should be the right price in the second phase, because all your projections will be based on phasing, right? Again, pricing is also dependent on sales velocity. So you may get the kind of velocity you envisaged in the beginning, and you may not get. Accordingly, you have to change the price of future phases. So that's again another thing which we need to take care of. And what is the financing strategy, and how the company wishes to manage its cash flow? Have they, in general, how do they manage it? How they have done in the past, and how they are going to do in future? So it is, and it could be a mix of equities, loans, commercial papers, etc. So you have to see how it works. What is the general cost of funding? How do they manage their cash? And that will determine which are the areas of stress which the company will face. And when you identify those areas of stress, you can pinpoint the areas where you can actually find a problem, right? And then that's where your audit points start flowing in. And then IT, what is the level of automation? What are the broken pieces? Where are the APIs? And what are the intricate problems of that particular application which you are using? Data leakage issues. All of that we will be able to identify when you do a complete assessment of the IT organization of that company. I'll come to specific areas. The first is business development. That's where it all starts, where you start looking for a piece of land where you want to develop your property, right? So you have to do a proper due diligence, and it has to be done from a legal angle, from a technical angle, and a financial angle. So as auditors, we need to look at all the due diligence reports. Everything is there, right? Here, financial due diligence is important because it is based on a lot of projections on the sales velocity, on when your stand funds will start flowing in, whether it is upfront you have to invest a lot of money, what is the peak funding for that particular project. All of that is all estimate. So you need to see based on past pattern and based on your current understanding of the economic environment, plus the saleability of that particular project. Where does it stand? Is it too optimistic? Is it too pessimistic? Or are there any mistakes in the calculation? All of that has to be seen. Then we've also seen that, in their frenzy to close the deals with, to buy a land, or, with a JV partner, many a times the people on the ground, they fast track the work, right? They try to close it just by any way possible. And that's where most of the mistakes happen. A lot of clauses are undercooked, they are not spelled properly. A lot of clauses are not brought on the books, they are just discussed between people. And when you look at after 3-4 years, those areas create problems for you. And then you have to shell out huge monies to deal with it. A lot of deal closures are also incentive linked in some companies. So, the people who are working on the ground, their incentives are linked to deal closures. So you can very well imagine what kind of activity they'll be showing on the ground to get that incentive, right? And also documentation completeness. So if the documents are not complete, it is going to bite us back someday or the other. So it's good to today, or maybe after 5 years, somebody comes around, looks for a document and it is incomplete. So we have to look for document completeness. Then when you look at the profitability calculations, again, as I spoke about, a lot of assumptions there. So we need to look for obvious errors and mistakes which have been done in the calculations. the quality and quantity of assumptions which have been taken, the timelines, are they very aggressive? Are they too slow? Because all of these would have been adjusted to show a certain picture. And we need to find out where those adjustments have been done. What are the peak funding? Peak funding means the that time when your investment in the project is the maximum and your receipts are the lowest. That's peak funding because that's where your maximum amount of fund will be involved. Right? So understand the peak funding and whether we'll be able to raise that amount of funds or not. So that's very important. Then what are the dependencies on various things? So dependencies are again assumptions where you expect that somebody, some partner will do something on time, but he does not do it on time, and then you have a challenge. So those are dependencies. And then finally, FSI calculations, which is the floor space index calculations. We've seen a lot of errors being made there. And sometimes, we don't consume the FSI properly. Sometimes the FSI is kept in reserve for a future phase and then it is not used. So look at the overall okay to you or not. This does not come to us easily. It has to be understood. We have to understand the industry. Each area has a different FSI. There are a lot of rules and conditions associated with it. So it may not be practically possible for us to get into it in detail, but maybe just by looking at it over a period of time and getting some experience into that, you can give some comments at least on the calculations there. Then if it is a joint venture agreement with a landowner, you need to understand the terms and conditions, look at their agreement, whether all the conditions in the JV agreement have been adhered or not. What are the recoveries which you need to do from the JV partner? What are the payments which you need to do to them on a timely basis? All of that has to be looked into. And this is actually a very big area where we actually find a lot of material there in terms of non-compliance. So you need to look at that. And then when all of these things have been done on an ongoing basis, the project gets on the floor and it is maybe 1 year, 2 years, 3 years down the line. We have to compare that what was the initial projection and where are we right now? Because that tells you that the quality of projections, what was the quality of projections? And that will set course for other projects or whatever you decide in future. And that will give some food for thought to see that what is our assumption capability. Do we calculate based on practicality, or we are just making things up? So that's very important thing, which will give you a lot of insights into in that whole area. Second very important piece is costing and budgeting. Now, costing, when you start a project, obviously you have to work out a very detailed cost structure to see which are the components. And with experience, all real estate companies have started including a lot of areas, but still people can make mistakes. So as auditors, we need to check whether the cost is all inclusive. Have we left out any area? Have we not maybe double counted something? So costing has to be very precise. In real estate, it cannot be as near as actual as possible, because then again there's a lot of variability, a lot of lack of clarity. But basis the experience and the benchmarks, you can still come to a certain cost levels. So we need to check all of that. The estimate should be vetted through internal and external benchmarking. You could use cost consultants wherever you think. At least you can suggest to the business teams that please use a cost consultant, because we are not very sure whether they've actually considered all the costs correctly or not, because we've seen a lot of errors there. So to avoid those errors, you can suggest use of cost consultants. A detailed breakdown and its mapping with the work breakdown structure in the ERP application, so that you have complete visibility at whatever you budgeted on paper, has it come down into your system, and you are tracking your actuals against that. And that's a very important piece, because unless you have that tracking, people might start misusing the budgets. So budget for one item is used in another item and nobody comes to know about it, because you're looking at it as a whole. So that has to be done very clearly, so that you are able to track each item very clearly. Then many times there are budget escalations. We need to check, were they justified, were they approved, and red flag if trends don't look fine to you. Then provision for contingencies. So a lot of people keep a lot of contingent budgets there. So the contingency should be within normative range. It should not give the project teams to play around with the contingencies and use it like a petty cash whenever they need. Okay? So the contingencies have to be budgeted very, very tightly. Then budget release and consumption. So since it is a time taking thing, it takes 3-4 years for some projects to get completed. You can't release the budgets in the beginning itself. They have to be released in phases, and you have to track consumption based on what you envisaged at that point of time. Now, when it is not, you can't just say that my project is going to run for 4 years and I have budgeted 10 crores for something, so I'll spend 2.5 crores every year. It's not that. Let's say it's a marketing budget. You have to do more marketing in the beginning itself. So you have to spend more in the beginning, and then as the project goes, you could taper it down. In case of, let's say, handover related items, you don't need to release the budget in the beginning itself. That budget will come later on towards the end of the project. So those timelines, the quantity of budget you need to release, all that has to be monitored very closely. And so we found observations in those areas. I'm sure there'll be observations in other companies as well. And then periodic tracking of the budget versus actual. Very important exercise. I think here what you can check is what is the seniority level at which the budget versus actual is being tracked, because that's one area where while there is a budget versus actual, it's an Excel sheet, somebody prepares it, he shares it around with everybody in the ecosystem and nobody looks at it. Okay? So you need to see what is the rigor with which a company is tracking its budgets. And if they are not tracking, it is definitely bound to go haywire for the company. In sales, I talked about the pricing adequacy and master management. So you have to you have to classify your inventory very clearly, because every flat in your building is not sold at the same price. There are certain premiums attached to certain flats, and there are certain discounts for certain flats, because they may not be in preferential location. They may not be facing the garden. They may not be facing the pond or the swimming pool or whatever it is. They may not be having sufficient sunlight, or they may be facing a railway track. So every inventory has its own premiumization capability. We need to understand whether the business is actually classifying its inventory in that way, so that they are able to get a better price for the better inventory and maybe settle for a lower price for the not that good inventory, and accordingly the pricing has to be set. Then benchmarking with competition is very important, depending on the class of developer we are, the kind of development we are doing, what kind of product it is, and then compare it with suitable comparisons. You just can't go back to your next door developer and say that, if he's selling at that rate, I will also sell at that rate. Sometimes you might underprice your project because your project probably is premium compared to the neighbor. So we need to benchmark, but with the right peers. Then control over pricing in ERP. And that's actually, again, one of the fraudulent areas where if people have access to pricing in ERP, they will be able to modify the prices and give preferential treatment to certain customers, and nobody will even come to know about it. So control over pricing is very important. Then payment plans, we launch a lot of payment plans. Some are construction linked. If the construction is completed at a certain level, then only the invoice will be raised. Some are time linked, saying that, every 3 months or 6 months, you're going to get a bill based on whether it is not linked to construction, it is linked to time. And then you have payment plans like a 1090 or 80, 2080 kind of schemes. As auditors, we need to understand the impact of what is the impact on cash flow of these timelines. What are we committing to the customer? How will it hit us in terms of the interest cost, in terms of the subventions which we have given, and then look at it holistically at the end of the project, that maybe calculate what impact will it have on your bottom line, and then maybe give your observations against that. Yeah. Now, sales comes through various sources. The customer may come in directly to you. He may come through a broker. He may come through a digital platform, through various websites, the channel partner website, which you have like 99 Acres, or the other brokerage websites. And there's a huge conflict between them because, as I said, there's a lot of brokerage moving around in these areas. So the direct leads get converted to CP, channel partner sales. The walk-in data is stolen from the marketing office. Channel partners pose as company officials. So when a customer walks in at a particular site, he meets a person at the door, and that person may identify himself as a company employee, or he may not simply identify as a company employee, but start talking to the customer. the customer feels that he is a genuine company employee because he doesn't know who's an employee and who's not. And that person is actually a channel partner. So they pose as company officials, lure customers with passbacks, and then get the property registered in their name without any effort whatsoever in bringing the customer. Okay. International customers, a lot of misrepresentation by the sales team because most of them do not come to the site and during their lifetime. It is just an investment for them. So they are sold pathetic properties. They are, done a lot of misrepresentations by the sales team, and that brings a lot of misrepute to the company. So while you don't lose any money there, you lose your reputation. So we need to be very careful of all our international customers. Okay. And then referrals by existing customers. So you already have a customer who has bought a flat in your existing site. That customer refers another customer in maybe to get a maybe a incentive from the company, but the employee is actually routed through another broker, right? Just to get commissions there. So that because the amount of incentive which you pay to an existing customer is very low, very less compared to the amount of brokerage which you pay to a channel partner. So a lot of stealing of customers happens in this country in this industry, and every company is grappling with this as a problem. A lot of companies have used a secret auditing methods where they send in decoys to the sites to find out if there are any brokers or are any employees who are converting direct leads to the brokerage leads. It is called mystery shopping. And there are a lot of consultants in the market who do these kind of mystery shopping. You can do it yourself as well, just to find out what's happening in each side. Okay. Then a lot of flats do not see the light of the day. They get terminated by the company for non-payment, or the customer himself may cancel it. And there are forfeiture clauses. So if the customer cancels or it is terminated, the entire amount which he has paid up till that time is not refunded. There is a forfeiture clause, and a part of that money is retained, right? So we need to have right policies around termination, around forfeiture, because it becomes a legal case sometimes. If you have not done it properly, the customer may take you to courts and then you have to pay through your nose, right? So all the right procedures, policies, and documentation around it, which is legally tenable, has to be maintained. If we start doing it rampantly, it is going to definitely create an impact on your reputation as well as the cash flows which happen in future in terms of penalties and whatever award goes against you. Right. Now, marketing is another important area. It may not be as big as an FMCG because mostly real estates are not marketed on TV. The areas where real estate companies market are digital, hoardings, and print. Now in digital, you will see a lot of advertisements on YouTube, on Meta, on various other platforms, and there media buying is very important because you're spending a huge money on buying space on YouTube and Meta, and that's a very technical thing to be checked. So you could use consultants who can come in and tell you whether you are buying at the right price or not, because YouTube and Meta offer you some windows at which you can buy at a lower price. Right? So while it may look like a very difficult area for us to audit, you can maybe use experts who can help you in identifying whether there are any savings opportunities or not. There you will also find that the agency which you are using is charging you higher commission as compared to what is there in the market. So those are some areas in digital marketing where you can apply your brains and do something. Then the largest problem which a CEO of a company faces is to see what kind of a return on investment we are getting on our media and marketing spends, right? And if you're and it's actually very difficult to identify what is your return because there is no clear indication of how much you spent and whether that spend itself led to a increase in sales or actually getting some sales through that particular campaign or platform. So it's hard to find, and that's why some companies have moved to a performance marketing kind of a pattern, performance marketing kind of a marketing mechanism where the payments to an agency are based on the outcomes of the campaign. So the amount of leads you get through the campaign or the amount of sales you are able to convert through that campaign are actually considered as ROI. Right? It cannot be exact science, but then people are doing that in the industry. You can see what is the way in which your own company is doing marketing and the kind of spends they are doing. and then decide how to audit it in whatever way you think is right. Now, collection is blood, lifeblood of your company. If you don't collect on time, it is going to be a challenge. But how does it get affected? It gets affected by invoicing delays. Simply by raising an invoice a week after your milestone was achieved will delay your receipts by a week. As it is, people don't pay on time, right? So if you raise the invoice late yourself, you are bound to get a payment 1 week later. And in real estate, a 1 week delay is too much of a delay because you're apparently short of money. So to get that assurance, we need to keep auditing at what were the milestones, when did they become due, and did I raise my invoices on time? And after that, did I have the right rigor in collection from the customer? Because you just can't sit back and relax by after raising the invoice. The customer is not going to pay many times. Only 40 to 50% customers pay on time. The remaining don't pay. So you have to be behind them. If you don't do that, again, your cash flow is getting affected, your projections are going haywire. So there has to be a lot of rigor in collection. A lot of customers, they play around by, delaying the registration of their property, because unless they register the property after paying 10%, you will not be able to raise any invoice unless the property is registered. And the customers know that. So they will, on some or the other pretext, they will delay the registration. So you need to identify those cases where registration is pending. What are the reasons behind which they are not being registered? If it is a deliberate thing, you need to send reminders to customers, follow up with them, and then get them registered. So I think overall here we are talking about the time value of money, which is very important. These are just indicative cases. You could have various other levers through which your payments may get delayed. When you look at it in absolute terms, you'll find a lot of areas where you can get money for the company on time. So those are the areas of audit where you can deep dive. Then there's a lack of reconciliation in a lot of cases, because customers, they deposit something into your account through either GPay or through check or online transfer, and then they don't give you any detail. And they are least bothered whether I have shared the details with the company or not, because I have paid my money. But for the company, it is a big headache, because they don't know which customer has paid. You are running with thousands of customers. Where do you appropriate that money? And it remains in a suspense account, it is not resolved. And then when the customer comes back after 1 year and says that I had paid on time, but you have charged me a penalty, and then you start digging up all the previous transactions. By that time, even the customer doesn't have the UTR number of the payment. Right? So I think reconciliation is one exercise which needs to be done on a regular basis, and you need to have as less items in your suspense accounts as possible. Right? Interest and penalty, again, this is again a huge income for developers, where you charge interest on delayed payments and penalties for various terms and conditions which you have established in your contract. Now, if you do an incorrect calculation, and these days these calculations are not easy for so many customers put together, it has to be through system, it has to be checked by somebody, and then finally recovered from the customer. And as I spoke in one of the earlier slides, waivers of interest and penalty by unauthorized people, just to get, some, brownie points from the customer, or maybe brownies themselves from the customers. Right? So those are some areas in collection which we could look for. Now, channel partners, industry pays around, anywhere between 2 to 8% as brokerage. It's based on slabs. It's based on the kind of property you are into, and considering the huge value of residential real estate or commercial real estate, the industry pays a huge amount of brokerage, and it is a big business, and everybody wants a share of that business. So we need to look at it in detail on what are the brokerage patterns, what are the policies under which you operate, how do you calculate brokerage, and what are the timelines at which you pay. Because when you're dealing with huge amount of flats and properties, it is very difficult to keep a track of which broker got paid how much, when did he get the first installment, how many flats he sold. It's a big reconciliation issue, so we need to have controls over that. And you know, as part of the channel partner engagement initiatives, companies spend a lot of money on their gifts, on slab-based schemes, incentives. I mean, the gifts are not small. They're very huge in value. People give cars, they give another piece of real estate, they give bullion. So we need to keep a complete control on what was the eligibility, how much money got earned by the channel partner, how much money we paid to them, what is the proof of that. All of that needs to be audited as your traditional, audit mechanism. Then we spoke about conversion of direct leads to channel partners and customer leads. The customers who wish to buy a property in your site, they are a big gold mine. And as Satish ji mentioned, the DPDP Act rules have been notified today. There is a huge penalty involved if the customer's data gets stolen. People who are actually auditing real estate industry must have heard that, a customer walks into the site and within maybe about an hour, that customer gets a call from either a channel partner or a rival real estate company pitching for their projects or their own properties, right? Which means the customer's data, when that particular customer walked into your site and the place where that customer entered his or her details have immediately got stolen. And that happens a lot in this industry. And the sources of leakage could be anyone's. It could be customer walk-ins, it could be call centers, telephone inquiries where people simply scribble their number on the paper, referrals which come in through customers. There are various areas where the lead gets captured initially and those leads are stolen. And with the DPTP Act, putting a lot of penalties on sharing data and preserving data, and the consequences of data leakage are huge. Right? So this is one area where real estate companies need to work a lot because it is prone with frauds. RERA registration is mandatory for all the channel partners. And, in some cases, we've seen that channel partners don't register RERA under RERA and they start advertising our properties on their websites. They will make their own portals where if a customer searches for a particular property, he or she lands up on the website of the channel partner and the channel partner is not registered. And then the authorities come behind both the channel partner and the developer saying that you have advertised without registration. So keeping a tab on your digital footprint on the internet and on the people who are advertising your property without you actually having a relationship with them. That's a very critical thing these days to do. I think we need to understand that whole ecosystem, see where your industry or your company works in which framework and what are the common behaviors you've observed, and then maybe take action in those areas. Then we come to operations, procurement of steel, cement, tiles, electrical, plumbing items, horticulture items, lifts. A lot of things are there, and these are huge monies involved. Here you will find your typical standard procurement processes being deviated, like quotation process not being followed. Some vendors give multiple quotes, multiple quotes received from the same vendor. Rate benchmarking has not been done. The quality and quantity of material delivered at the site are not checked properly. Right? So, just to give advantage to the customer, to the contractor, or just by being simply, lethargic in terms, checking those qualities at site, you tend to lose out on the materials, the value which you pay for those materials. Then there are scheduling issues. So you could face shortages of tiles or steel, or if you're not planned properly, there could be shortages which will further delay the project. And then again, you order for those in hurry, and then there's a rush charge involved, which again creeps up your cost. So scheduling issues are also very common, and they need to be taken care of very clearly. Spot buying, again, everybody knows leads to higher costs. So what is the procurement strategy? How we are planning our purchases at what cost is also very important. When you look at the contracting strategy, the contracts are huge. But if your strategy is loosely drafted, and here I'm not talking about the contract, I'm talking about the contracting strategy. If your strategy itself is not very clear, there are bound to be loopholes in that. And when you actually go and execute those on the ground by engaging a contractor, you'll find that, sometimes you've paid huge monies where you shouldn't have paid. And, if they lack detail, the contractor might take advantage of that and say that, this was discussed, this was agreed, and now I'm going to charge you this much. It is going to be a huge pain. So the contracting strategy has to be very clearly documented, signed off, because it is going to lead to a lot of repercussions later on, right? The kind of contractors you select also has to go through a rigor. There has to be a pre-qualification mechanism. But if it is not there, or the parameters are not very clearly defined, again, we are going to have a challenge. And you will end up with contractors who you really don't want on your site. And when a contractor enters your site, remember that he makes a permanent change in your product, in your project, and he's there to stay for maybe 6 months, 1 year, or 2, 3 years, right? Dealing with a substandard product or a bad contractor is the biggest of headaches of the project teams on the ground, right? So selection of contractors is very important. Then people select preferred vendors, which is typical to any other industry. Here also, you'll find some patterns where you see that, wild card entry of a contractor at the last moment. So there is a comparative quotation process, there is a tendering process, and suddenly you find at the last stage of negotiation, one contractor has been brought in by the contracts team, and that contractor eventually wins the bid by virtue of being the lowest cost vendor. Clearly, it is a case of preferring a certain vendor at the last stage and rigging the whole process. So be mindful of, at what stage, which contractor was there, who had information to the initial quotations, the prices, all of that, and were there any instances of leakage of information that you can find out by checking for these behaviors. Then, some contractors have a tendency to load higher cost in major bill of quantities, so that the maximum payment comes to them upfront in those bill of quantities, and the other bill of quantities where they are not really interested are loaded at a very low cost, right? So it is a way of contractors of getting money upfront and assuring that wherever they have expertise, they get all the money. And if they are not able to perform later on, or a part of their contract is descoped, they don't lose out on money. Okay, that's how they manipulate. Quotes received from single vendor, it happens in every industry, and multiple quotes from same vendor through different names, again happens to all the industries. It can happen here as well. So if the contract is not properly drafted, it may allow loopholes to contractors. And we've seen that contractors take us for a ride saying that some things are not clearly defined. They know what are the loopholes because they are into that business. Extra cost claims is something which they live on, they thrive on. So they will definitely find the loopholes in the contract which you have issued to them, and they will try to utilize it. So over a period of time, you tend to understand which are my loopholes, and you start plugging them in your contracts. So having the right tight contract is very important. In operations, we found that a lot of contractors collude with their employees. There are unauthorized amendments to work orders. Excess wastage of material is allowed to the contractor without any recovery. There is no recourse there. Many times contractors do not pay wages to their workers, and because probably we have held up the contractor's payment because of non-performance or delays or whatever it is, and then there are huge challenges, the IR issues at the site. Sometimes the safety equipment is not used, which could lead to a lot of safety issues at the site, and they don't comply to the statutory requirements. And being principal employers, it is our duty to get the compliances done. So in case of any non-compliance, finally the authorities may come down heavily on us, saying that we did not ensure the compliance through the contractor. So I mean, those are also issues which generally companies have to deal with. So while dealing with contractors, we need to keep an eye on all these areas and ensure that there is a proper review mechanism in all of these areas, so that you don't have with any surprises later on the life cycle of the project. When you talk about payments to contractors, this is one big area where finally, so the contractors have a running accounts bill system where they raise invoices every month. Now that bill has to be checked very properly because there has to be a measurement sheet attached to it, all your material buying, the labor payments, all your advance recoveries have to be done as per the contract. And then there's a retention amount as per the contract. There are certain material reconciliations which have to be done. All of that needs to be passed very clearly and very precisely, and then the payment has to go to the contractor. If you don't check this properly, the contractor might take us for a ride. They may start raising higher bills, and we'll end up paying money much in advance of what it should have been paid. So that's one area where we need to have a lot of controls. And then liquidation damages charges for delays. Many a times we found that the execution teams are quite weak in negotiating with the contractor on liquidation damages charges, which is a penalty for delay. And then you find that they are not levied correctly. So that's one area to look for. that what was the LD which was due and how much you actually charged from the contractor. Extra cost claims by the contractors, again, big area of earning money. I spoke about it in earlier slide. Many times they lack detailed breakup, justification. The communication from our side is also not very good. As a result of which, the company is not able to prove that it was indeed the contractor's mistake. And they end up paying huge amounts of money. Even the code of law doesn't support you if you go to court. Okay? So these are very costly mistakes which generally companies should avoid. Some other issues which may or may not be there, but at least we found that it is there in some of our sites, is that the FSI is not fully consumed, so you lose out on the opportunity for higher revenue. Construction has been done without approval, or it is deviating from what your approved plan was. Quality management issues, because quality is one area which invariably gets affected when you cut corners, when you don't monitor the contractor on site, when you have not designed things properly. It could be anything. So a proper root cause analysis of quality issues like leakage or plaster chipping off, or things are not flushed properly. All of that, when you do, you find that it is linked to some or the other weakness in the system which we did not pay attention to in the earlier stages of the project. Now, when your project is ready, you do a handover, you take money from the customer. So, I mean, the handover should be done only when the occupation certificate has been received and the customer has paid his or her last installment. If you hand over before that, it becomes difficult to get that last bit of money from the customers. So, proper control process around that is very important. Many times the handover gets affected because of delayed occupation certificate, because some conditions in the original IOD have not been adhered to. So we need to keep an eye on what are the risk areas in terms of getting an OC on time, and then raise flags to the management saying that this could affect your OC, because a lot of your money is riding on it. And unless you hand over, the customer is not going to pay. So keep an eye on this area as well. Then the customer pays a lot of maintenance advance. We all live in societies. We know how much advances we paid. There's a society which manages that fund. There's a corpus. A complete audit of that area, how those funds have been managed and whether they've been kept aside in a certain account. Nobody has touched it. And when the society gets formed, it is handed over to the society after getting all the checks done. All that areas, depending on the kind of arrangement each developer has, you can decide the audit program to be run in these areas. Now, a lot of times, as I spoke about, being chartered accountants, we do not have expertise in a lot of areas where you need to take external help. At least we've taken help in some of these areas. So you could use engineering firms who check your running account bills, because bill passing is very weak in certain companies due to lack of knowledge, junior teams, collusion, and there these engineers can step in and let us know whether our bill passing is accurate or not. Okay? And the elements they find are generally the same. Incorrect measurement, advance recovery has not been done for mobilization and material, retention amounts have not been recovered. Okay? Then GST audit can be done through technical experts if you don't have in-house expertise, because that's one area where there could be significant leakages and there could be compliance issues, because managing compliance again is a big challenge there. So you could get GST audits done. Marketing audits, I was briefly dealing on digital marketing. It needs a certain set of expertise. If that spend is big enough, you could probably use some of these areas. Just give me a moment. Yeah, sorry for that. Is the presentation still there? Can anybody confirm?
Yes, sir.
Yeah, okay. Now, some developers have also gone into plotting. I'll not delve too much into that because it's just one small area. Things which we need to focus there is land due diligence, sales pricing and velocity, infrastructure development cost, and common area maintenance. So those are some areas where you can do some work. Now, talking about governance mechanism, we need to have a risk management framework for the industry where you look at the enterprise risks, especially the pestle risk, related to environmental, political, social, economic, and other risks which are applicable to your company as a whole, not at a project. And then you need to look at risks for the particular project, right? Items having a direct impact on profits and timelines, get into details of that so that you can choose which areas to focus on during your audits and leave out the other areas. And then there are others like cybersecurity and fraud risks, which are anyways applicable to any business. In terms of process standardization of documentation, you need to have SOPs, delegation of authority matrices. Wherever you need rapids, you need to have rapids which talk about granular details of DOAs, and then the whole policy framework and the internal control matrices. These are just like any other regular company. We need to have the same things for real estate as well. Compliance, we spoke about it, that there are a lot of areas where there are huge repercussions. We need to manage these compliances. There are automated softwares where you can have compliances coming as a dashboard to you and people uploading all their evidences. And I think that's recommended at least for real estate companies in a very big way. Data privacy we spoke about, it's become very important because you're handling a lot of personal identifiable data of customers digitally. And we are almost the first industry in the whole country where the regulators will come and find out if we are keeping the data of customers safe or not. Okay? And then corporate and secretarial laws. Safety audits is another area where we need to focus on. There you could use experts to come and see whether adequate safety precautions are being taken on site or not, because a fatality or a partial decapitation of people, or people getting near misses is not desirable at all, right? So human life is very important, and from that particular aspect, you can decide on how to get a safety audit done and safety practice, following safety practices on the ground. We can decide on that. IT and cybersecurity, again, mostly in terms of the data leakage plus all your regular cybersecurity issues need to be audited very clearly. Now, one important piece is how do you do analytics? At least in Godrej Properties, we have done a lot of analytics in real estate, and we've used a lot of data. We have access to a lot of almost every application being used by the company. So you have sales data, leads, collections, expenses, every bit of piece of data we have turned around and done all our traditional analytics. But just to see, real estate data analysis is not so easy. So you have to use machine learning and AI. There are a lot of use cases which are upcoming in real estate, and I implore all of you to explore these areas and see how you can make use of AI, because it's all English many a times and the data is very disjointed. So try and figure out what works best for you in terms of AI. Some of these areas I mentioned here, like, bill of quantities comparison, sales trends, construction progress, compliance, and you can get a lot of wealth of information when you use AI in these areas. Lastly, how do you stay updated in this industry? Read reports of real estate consultants, banks, annual reports of listed real estate companies, be a part of peer groups and networks, and track the developments which are happening abroad, because abroad means out of India, because probably those practices will sooner or later come into India as well. So that's how you keep yourself updated. With that, I come to the end of my presentation. Thank you so much for a patient listening. I'll be happy to take any questions which you have.
Yes, sir. So Satish this side.
Yes, please.
So your deliberation is very insightful, interesting, and I would say encouraging. And let's have some interactive. Sir, some questions are there.
Right.
Sir, Daniel wants to know, are prefabricated structures kind of construction happening in India, like in China?
Yeah. So as of now, not really that much as we would expect. We have been using aluminum forms for construction, but not prefabrication forms. There's a lot of discussion happening in the industry. And one of the reasons why it is not happening today is because of the, you're not making too many buildings of the same size. Every building is a little different in terms of design. And that's one of the major reasons why you're not able to do a prefab here. But there's a lot of discussion around. People have, companies are committing investments towards that area because they also want to, shorten the life cycle of projects. So there's a lot of discussion around, but as of now, you're right, there is no such, a major use case in the industry.
Great, sir.
Yeah.
Another question is cement, steel, and RMC.
Hmm.
Could you share some insight, your common observation or frauds you have experienced? Sometimes we have been given understanding that price of these materials are not much company
Hmm.
can control, and these material you can store also.
Sorry, what was the last one?
These material you can store also.
Okay, okay. See, cements, it depends on the kind of purchase policy or contracting strategy you have. If we are purchasing directly, it's a nightmare to get a control of the quantities and the consumption patterns. It is through analytics where you can analyze the kind of money, materials you bought and the kind of consumption which has happened. And for that, you need to, speak to industry experts on what are the normative consumption patterns of these items, and then compare it with the actual consumptions to see if they are deviating a lot. Second is, if it is through a contractor, then you need to have enough safeguards in the system, in the contract, related to the price and the consumption quantities. Because if when you do a contract, the price of steel, cement, and all these items is at a certain level, but 6 months down the line the price may change significantly. So you need to have adequate cushions in the contract to take care of those escalations, and then see how it works for you. Second is the reconciliation is very important of the quantities, because if the contractor has done a lot of wastage, or he has not delivered the required quantity on site but has shown that I have actually delivered, that's again a very big control gap. So receiving material at the site, having a complete understanding of that, reconciliations, verifications are very important. It depends on the kind of setup you have in terms of buying these and consuming these items. Did I answer that question, or you have anything else to know about that?
Sir, you address the question. Superb, sir.
Yeah.
So these are on the questions, and I would say it was really an excellent session. And first of all, I would like to compliment you on the depth of the knowledge on the topic. Even the more impressive is your delivery, sir. The way you have been distilled such a vast subject and explained it so clearly is truly commendable. A
I
I'm glad
well,
agree.
you
I
liked it.
agree, Satish ji, and it had been an excellent session. Commendable, I would say, the depth, the sharpness to each topic, and very well covered.
Thank you, Pooja. Thank you so much.
so thank you so much for your this elaborated session, and it was really insightful session. Thank you so much, Gaurav sir. Thank
Yeah,
you,
thank
IIA
you.
India, Bombay chapter. Thank you, WIRC, of ICAI. Thank you, each one of the participants, for your time. Thank you, Pooja madam. And with this, we can conclude today's session. And don't forget to subscribe for our next, which is on the 21st. It will be on the technology. Yes, it is on the technology industry specific. So thank you, Gaurav sir. Have a very nice evening.
Thank you. Thank you, everyone.
Thank you, Pooja madam, for joining.
Thank you. Thank you, everyone. Have a great weekend ahead.